Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that massive pump on the Bitcoin chart. Guys, the last time we were looking at the BTC chart, we were looking for this macro pattern where we did have a bullish pennant pointed up to perhaps the 80s or the 90Ks. And we also had inside of that a broadening descending wedge, right? And what we were looking for is either to hold the lows of that bullish pennant or to perhaps have a flash wick that maybe even took out the bottom of that broadening descending wedge. But then what I mentioned is that it did have to be a flash wick that would quickly bring us back into our pattern. And absolutely, that's what we got. So this is the best case scenario that we were looking for in order to avoid a potential return to the bear market. However, we are not out of the woods. And the reason why this video is a bit late in production compared to my previous schedule is because, of course, I have been building out with my friend Retta the AR Collective. Of course, AR has been around for a few years, as has Alpha Commission, and we've now merged together. And I do encourage you guys to check it out. It has the best alpha research in crypto. And guys, again, just getting back to the charts, we're just in this kind of dicey area on the charts here, where you can see for the majority of the time here on the daily, we have been under the Bollinger Band midline. Whenever we're underneath that Bollinger Band midline, we are more in danger of coming back to our lows than taking out highs. And of course, whenever we're above that Bollinger Band midline, we are more likely to have bullish continuation to the upside. And today is the first day that we're actually seeing a candle closure above that Bollinger Band midline there on the daily. And that does come off of putting in this higher low on the charts here, where we have low and then a higher low. And now we're taking out that Bollinger Band midline, getting out of this kind of gray area here at the bottom of this chart. And should we hold these levels, we would expect at least to have a little bit of a pump, maybe to that $64,000 area if we're lucky, and then a continuation from there again if we're lucky. Now this thing could just continue to go sideways. There's absolutely nothing stopping it from just continuing to broaden and descend at the same time. But right now, this pattern is getting a little bit long in the tooth. We have 1, 2, 3, 4, 5 waves here, actually 6, and working on perhaps a 7th there. And this is usually where patterns start to get very mature. You can see we're about 70% through this pattern wedge here. And again, somewhere around this area is where we would expect patterns to start to mature and then either have a critical breakdown or a critical break to the upside. And so we are on a bullish breakout watch as well as that potential downside that we've been looking at for quite a while. Now, how can we get a better idea of this than just patterns? Well, let's just take a look at our regression tool. You can see here that just like in the past when we push up on the midline, typically it does take a little bit of a low in order to push up into that upper half. We have now gotten a couple pushes to the upside. Maybe we could have another one, maybe some type of a fake out to the downside and another push to the upside. But I would expect that if this chart is going to have continuation to the upside, that next push should break through, or the one just following. Otherwise, we are at risk of just retesting our lows again, sort of like this slump over here and this slump over here. It is possible that we could just slump over again, and we do have to be aware of that. However, as long as we are above that Bollinger Band midline, again, while we can have fake outs, typically when we do get above it, we do see continuation. And I am seeing that right now, where we are holding that midline. And if we close the day above that 60,400, I am going to take that as a potential front runnable signal there. Now let me just get rid of this hopium right here and just put on our local trend. Going along with what I was just talking about, you can see that we did have a drop candle over here, just like we had a drop candle back here. And while we can get trend extensions, where we just continuously extend and extend and extend on trends, we are breaking out of the last drop candle that we had, and we did just have a bullish retest. So if this thing has the opportunity to have continuation, it would be from this area. I'm going to put on some key levels for you just to take a look at what that could mean here. And as long as we are above that volatility pivot at 60,200, my bias is going to remain to the upside, even though we are technically still in the alpha momentum pool, which is that kind of gray area, that fog of war where the momentum is being fought over by the bulls and bears. As long as we have that bias on the daily pivot, I am going to still be looking towards that upside. Now, under there, we will be in danger of losing our momentum to the upside should we cross 58,700. That's going to be my red line. That could suggest greater continuation to the downside, perhaps even retesting that bear zone somewhere around 54,000-ish, okay? So again, if bulls are not able to push this chart up, then bears will attempt to drag it back down. But if we are able to hold that pivot at 60,200 by the end of today, then I would be looking to flip 61,200 and then perhaps working on this pi cycle bottom line, or even the bull zone somewhere between 60, maybe 62,700 all the way up to 66,000, and seeing if we don't get a rejection somewhere in this area. Why is that pi cycle bottom line the kind of a line in the sand for me in this chart? Well, anytime that we do have the pi cycle on, you can see that as long as we're above that bottom line, we do tend to be in a bull market. So just zooming out above the bottom line here, bull market, above the bottom line, bull market. Yes, we can have little dips and furloughs, but of course, once we get back above there, everything seems to be gravy. Now, as long as we're quagmired underneath that Bollinger Band, that the pi cycle bottom line, then you can see that it is potentially bear market territory. So you would not be blamed. Okay, you would not be blamed for just waiting for those higher time frame confirmations where, let's just say something like this happens. We push up, right? Maybe we have a little fake out to the downside, right? We push up again, just kind of like hang out here, still in danger of rejecting the pi cycle bottom line, and then finally pushing up here and putting some price action in this area that maybe breaks out of this, descending wedge that we have here going on. And this would be still a very conservative play, assuming you're able to put in bullish price action. Now, for you shorter time frame traders, of course, in the group, we were talking about the 4-hour as well as the daily levels, and just we've been smashing through them every day ever since this bottom. We did eventually have a 4-hour volatility pivot all the way down here somewhere around 50, and we've just been chugging along. So again, if you guys aren't in the group, please do check it out. You're going to get that daily alpha and sometimes multiple updates per day, guys. Okay, but right now I did just want to give you an overview of where we are in the market. Of course, as long as we're in the lower half of this regression trend here, we're still in danger of coming back to our lows. But as soon as we cross that 50%, we are going to have a higher chance of perhaps continuing to the top of that trend somewhere again to that 66 to 68, maybe even $70,000 zone. And right now, I am going to have a little bit of a bullish bias, just personally, based upon the structure in this market. Because what we can see happening here is that we are not only coming hot off of a 16-hour Class A bullish divergence, right? At least a phantom drive of it. We also have a phantom drive of 3-day bullish divergence, and that tends to be quite powerful. Now, sometimes these 3-day bullish divergences do fail, and we do come back to our critical lows. But typically, what I find is that even if there is some interplay, that 3-day bullish divergence does eventually pan out, which does suggest, right, and this is not financial advice, but it does suggest that this may be turning into the area that you would like to DCA in on if you haven't DCA'd it already on that flash wick, which was very scary. And by the way, also very risky because we very easily could have continued breaking these levels at 50,000 all the way down to the 40,000s. And we're still technically at risk of that. But with these bullish divergences and some of the other things that we're seeing, right, especially if we hold above that Bollinger Band midline, again, these are lines in the sand that you can put on your own charts. And of course, you're going to need stop losses and some type of risk management system for yourself. But if you're a very conservative trader, you might just wait until we're back above that pi cycle bottom line there. And if you're a very aggressive trader, you might just say, well, any pullback is for buying because we do have these bullish divergences stacking up. And then if you're a very, very aggressive buyer, if we do have the chance to come back to our lows, you may want to take just a bite there, just like those who took a bite on this flash wick over here, because that could end up being the actual higher low if we do get that drawdown, and then maybe it's just up only from there. Okay, so we have to be aware that if we get underneath that bear zone, underneath 54,000-ish area, that we could get stuck there, especially as we get quagmired under the pi cycle bottom line. But yeah, right now I am favoring the upside. Okay. All right, guys, that's your alpha for the day. Stay safe and happy trading.